Hi, everyone. I'm Jamie French, wealth advisor with Advent Partners. And today I want to talk with you a little bit about something that can trip investors up as they're watching the markets go up and down. And that is, why can a company or a sector of the market show good earnings and yet still see the stock price drop or still see increased volatility as we've been experiencing lately? This year, strong corporate earnings have been a key driver of market performance, and those earnings have remained strong again this quarter. But here's the twist. Unlike earlier in the year when strong earnings were reflected in strong market performance, right now what we're experiencing is strong earnings and volatility. So what's going on and why is it different? The simplest way to think about this is that the market isn't just asking, did a company beat its estimate? But it's asking, did it do better than what was priced into the market or what was expected? And those aren't always the same question. Think of it like a student's report card. If a student expects to get an A plus and they get an A, that's still a great grade, but it can feel like a letdown just based on the expectation. And that can be true in the market as well. A company or a sector can meet or exceed the official analyst estimate, but it can still fall short of the unofficial expectation that's been set in the market. And according to FactSet Earnings Insight, that dynamic is in play in the current results. The S&P 500 corporate earnings growth topped 20% for the second straight quarter year over year. And revenue growth has followed suit across most sectors. And the percentage of companies that are beating their estimates is well above the 5 and 10 year averages. So that's real, meaningful data that's showing good financial results. And it's exactly why I think maybe investors are thrown by, the recent volatility and how that's working. The reality is that strong earnings doesn't mean that the picture is without risk or that there aren't headwinds. There are some headwinds, and there's the potential that the labor market is cooling off. There are concerns about inflation. There's a new Fed chairman and uncertainty around what actions the Fed is going to take. And there's the ongoing conflict in the Middle East and the repercussions of all of that. The point that I want to leave you with today is that strong earnings and headwinds and uncertainty can all coexist simultaneously, and that's kind of the normal nature of the market. Our job isn't to predict when the pace of growth in the market is going to end. It's to make sure that your portfolio and your retirement aren't dependent on that growth continuing indefinitely, because we know that's not realistic. So as earnings season continues, don't be surprised to see good results met with mixed reactions or volatility in the market. That's not a warning signal. It's just a normal part of the way the market digests information. And if you'd like to talk through how that might be impacting your portfolio, we're always happy to walk through that with you. Thanks for watching today, and I'll see you next time.